Hello, it's Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, June 28th. I'm going to start off tonight's report by looking at the S&P 500 futures, and this is the largest index in the US and the most important one. It's not the Dow. And what we have is potentially setting up for, after a very strong rally off the bottom, starting in the middle of March, we had higher highs, higher lows, got thick in the middle, and then a parabolic tail at the top. This usually spells trouble going forward. For those of you into Elliott wave, it can build into an ABC correction, which is very normal, right? So the other way to look at this is that range expansion moves to range contraction. So this was actually exhausted from a weekly time frame period. This is what we're dealing with, and then we're going through this, actually what has proved to be a very mild consolidation at this point. So we're familiar with this. We see what's going on. What we want to see is whether or not this is really going to extend to the downside. To me, the bottom side of this is going to be about 2,800, and it's going to create, if we go out to the weekly chart, this is going to create a higher low if it comes down to here. There's going to be a lot of panic and, just utter like, oh no, here we go again, if this happens. And a lot of this is due to the kind of the second wave of the virus coming through and the resulting damage it's going to do to the economies, right? But this is all, if we forget about the news for a second, this is all very normal. When you see markets go ballistic to the upside, they typically will throw off a higher low and then start moving again. If we go out to the cash index, we can see an example of this happening, just about a year and a half ago, when we came off of the end of year sell-off in 2018. Beginning of 2019 started off with the same type of rally, and then we came straight back down over the course of about 5 weeks. Now again, this was a huge degree of panic. People didn't know what to think about this at the time, but it just served to print a higher low, which was then printing a higher high, higher low, and then off we go again. This is very normal. Now, the reason why I'm bringing this up, why am I talking about the S&P 500? It's because pretty much they've been going in parallel. If you look at the damage that the move did in February and March, we had somewhat similar move when we talk about Bitcoin. Now, this has been much flatter. We've been in this amazing consolidation for weeks and weeks and weeks. No, actually months we've been in this thing. And it seems like it's never going to get anywhere. But the more that this builds up like this, the stronger the eventual break may be. Now, if I could put in a request to say, give me a chance to design the next move. If my ultimate goal was for the price to be up here or higher, then the first thing I'd like to see is the price pull back. So this is what I'm saying here, is that we may have the larger markets pulling back in the near term. And I think Bitcoin will have no choice but to go along with this because it's been consolidated. It's been joined at the hip with other risk assets, really since this whole correction began back in February. So for this to pull back to a 38.2 or maybe as deep as a 50%, I don't think it's going to get there, but this confluence right at the 38.2 and the 8,000 level, which has been so important for so long, would serve to kind of like pull back the slingshot, and then perhaps we can get started on this eventual rally. So that's my point here tonight, is that if we do end up pulling back in the short term because of the news and because of market sentiment, things like that, don't look at that as a bad thing. Look at this as an opportunity in the short term. If we do start to pull back, I'll be looking at ways to sell puts to be able to potentially accumulate down here below the 8,000 level. Now, if we just go out to the various coins today, we're not, this is what I've been doing all for the past week, is we've had haves and we've had have-nots. And even though Ethereum is dropping into a daily downtrend, it doesn't look that bad right now. And actually, with a Sunday night, with about an hour and a half left to go on the trading day, this does not look that bad at all. This is a very mild consolidation. Ripple, on the other hand, looks terrible. This honestly looks terrible. And it's not because I have any kind of religious bias against Ripple. or Litecoin or just about any of these, they just look not so good right now. There are some that look healthy, such as BTC, such as Ethereum, and some that don't look so good. Now, Chainlink has been doing really well as of late, although we had a really bad Saturday on this, but still you can see the primary trend is still to the upside. It is pulling back, but it tends to end up printing higher lows and then bouncing from there. So a couple of these have done okay, not Bitcoin SV. KNC has been one of the ones that has stood out lately. But again, there's this whole whack-a-mole syndrome that if something dares to show up, the bears come flooding in. Eventually, they will become overconfident and it will be their undoing. Okay, let's go back to Bitcoin versus the US dollar and let's set the expected move going into the end of July in this case. So we just got through the end of June, and looking at the option chain, if we do a quick look over here, we're sitting at about 9,100. So we would use the 9,000 strike. And what we're going to do is simply add up what are the prices of the long, in this case, the calls. That's probably the wrong color to use with this. We could use something like this. Okay. The calls and then the puts over here. And what we're simply doing is we're looking at sort of a midpoint price. If we add these two together, we're going to get the straddle price, and the straddle price gives us an approximate expected move going forward if we look at BTC. And so what I found was the puts and calls, if we put them together for the end of July, it's about, for one full BTC, it's about 1170. So that's a plus minus 1170. So what that means is that for the end of July, we have an expected move of 10,270. So we're going to bring this one in, 10,270. That's pretty close right there. And then the bottom end of this expected move is going to be about 79.30. So once again, we're going to pull this up and you can just see that the expected move is just coming in, right? Implied volatility has been light and we're going to drop this in. So that is our updated expected move into the end of July. That's about a month from now. This is what we're looking at. That probability cone has got a 68.2% probability looking forward. So the way that you can do this is, man, any pullback, we want to be selling puts down here below 8,000. Want to be selling puts down here below 8,000. Let's take a quick look and see what those would render right now. If we go out to the 31 July, and that's about what we would sell right now. I typically like to go a little further out than 4 weeks, but if we go down here to the 8,000, we can see that for a full BTC, this is about 218, 230, so maybe about 2.25. So if we divide 225 divided by 8,000, that's going to be about a 2.8% return, which is not great, but it's there. It's something that's very consistent, and that's without the pullback. So if we do actually start to pull back, then we can get much more aggressive, either selling at the $8,000 level or maybe even selling something slightly further out of the money, such as 7,500, which would be what I would do. So there we go. Here's the move. Here's the potential pullback. This is the opportunity going forward. We need to accumulate below 8,000. That is really the goal at this point before the big break. That's it for today's report. Thanks for listening. Have a great week. See you tomorrow.